This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today we're going to explain why insurance only pays for fortuitous losses and that a misplaced trust in another can be effectively excluded from a policy of insurance. WW Contracting Inc. and its owner Doug Williams entrusted tools to a WW employee but demanded their return at the end of his employment. When the now former employee allegedly failed to return all the tools, WW reported them as stolen and sought insurance coverage for the alleged theft. WW's insurance company denied the claim primarily because WW's insurance policy excluded coverage for property loss, quote, caused by or resulting from dishonest acts by anyone entrusted with the property, close quote. In Doug Williams and WW Contracting Inc. versus Pekin Insurance, the Court of Appeals of Indiana on March 4, 2024, resolved the dispute. WW sued its insurance company for breach of contract, but the trial court granted summary judgment in the insurer's favor. On appeal, WW claimed that there remains a genuine issue of material fact as to whether a dishonest act occurred because the insurer was unable to determine if WW's former employee actually stole its tools. Assuming a dishonest act occurred, WW also claimed its former employee was no longer a person entrusted with the tools after WW demanded their return. WW had employed Dante Wells from December of 2017 until January of 2019. During that time, Wells allowed WW to store its company tools on a piece of real estate Wells owned in Tippecanoe County. In exchange, WW allowed Wells to use the tools for, quote, side work, close quote, in his own name. In March of 2019, after Wells stopped working for WW, the company demanded that Wells return the tools stored on his property. When Wells refused, WW reported the tools stolen to the Tippecanoe County Sheriff's Department and sued Wells for replevin. Wells eventually returned what he claimed were all of WW's tools, but upon inventorying the returned items, WW determined that a lot of tools were missing. WW therefore submitted an insurance claim to its insurance company alleging Wells stole the missing tools. The insurer investigated WW's insurance claim by interviewing Williams and Wells about the loss. Williams assumed the tools were still in Wells's possession, but he did not know that for a fact. If Wells no longer had the tools, Williams had no idea what happened to them. The insurer was not able to determine if Wells actually stole WW's tools. Regardless, the insurer concluded WW's loss was excluded from the policy's insurance coverage and denied WW's insurance claim on the two alternative bases set forth in the exclusions. At all relevant times, WW Construction, Inc. was the named insured of a commercial insurance policy issued by Pekin Insurance. Among other things, the policy provided for accidental loss to WW's tools. The policy, however, also contained the following exclusions, quote, dishonest act entrusted person. We will not pay for a loss caused by or resulting from dishonest acts by anyone entrusted with the property, close quote. It also excluded, quote, unexplained disappearance. We will not pay for a loss caused by or resulting from unexplained disappearance. WW's allegations that Wells stole its tools established the occurrence of a dishonest act for purposes of the insurer's motion for summary judgment. Wells was also a person entrusted with WW's tools. In raising the exclusion as an affirmative defense, the insurer essentially accepted as true WW's allegation of Wells' undisputably dishonest act. Thus, to prove the dishonest act and trusted person exclusion barred coverage of WW's loss, The insurer was only required to establish that Wells was a person entrusted with WW's tools. Now, to entrust means to commit to another with confidence. WW does not dispute that it entrusted Wells with its tools by storing them on Wells' property during his employment with the company. In the absence of any ambiguity, the language of the policy's dishonest act and trusted person exclusion must be given its ordinary meaning. Nothing in the language of the exclusion requires that the dishonest act be contemporaneous with the insured's confidence in the entrusted person. The exclusion applies broadly to loss caused by or resulting from an entrusted person's dishonest act. The intent of the dishonest act entrusted person exclusion is to bar coverage for the insured's misplaced confidence in another. By entrusting its tools to Wells, WW placed its confidence in Wells not to steal the tools. The misplaced confidence resulted in WW's loss. The fact that WW no longer had confidence in Wells at the time of his alleged theft is irrelevant under the terms of the policy. The Court of Appeals, therefore, affirmed the judgment in favor of the insurer. In my opinion, when an insurance policy excludes certain potential losses in clear and unambiguous language, a court must apply the exclusion as written. There was no question that WW entrusted the tools to Wells and claimed he either stole the tools or they disappeared mysteriously. Both potential events were excluded, and the policy excluded the claimed loss, and the court rightfully affirmed the trial court's decision. This video was adapted from my blog, Zalma on Insurance, which is available free to anyone who clicks on the URL zalma.com/blog. You can subscribe to the blog at that URL, and you'll receive notice of every blog posting, usually 5, sometimes 6 a week, and you'll have access to the more than 4,700 blog postings. Please tell your friends and colleagues about the blog and the videos and let them also subscribe. If you subscribe, you will please click on the like button at YouTube and the thumbs up button on rumble.com. And if you're interested in further detail about insurance, insurance law, insurance claims, and insurance fraud, please consider for a very small fee subscribing to my Substack publications. Thank you again for your attention.